Yeah, good afternoon, good evening, folks. Michael Zuber, one rental at a time. This is your daily financial news for Wednesday, November 16th. And these are the 5 things that I think you need to know. Let's get into it. Number 1, retail sales for the month of October. To give you a little bit of color, last month, in the month of September, we had a big fat 0. Expectations for October were plus 1%. Folks, these are month-on-month numbers. And, drum roll please, they came in at 1.3% or exceeded the expectations of 1%. If you watched my channel on Monday, I had a conversation with Taylor from Life Goal Investments, and I shared that I thought they would surprise to the upside, and they did. Now, what does it mean? Well, remember, we are living in this odd world where good news is bad news and bad news is good news. We have a Federal Reserve that is trying to crush demand. I think what you have here is an example of retail sales being stronger than they would like. So even in the face of CPI, PPI surprising to the downside, retail sales is going to be something that the Fed looks at and goes, unfortunately, we need to do more. That might not feel good, that might not be fun to say, but I believe it is true. The retail sales surprising to the upside means I think the Fed is definitely going to give us 50 basis points in December. It will be lower than the 75 the last 4 times, but the hope of a pause, the hope of a quarter left the building with a strong retail sales. Next, let's talk about Target. We got Walmart's report yesterday, which generally speaking, surface level, Walmart appeared to be strong. However, as I looked into the report in more detail yesterday evening, Walmart is painting a picture of our economy that you and I should pay attention to. 2 things. A majority of Walmart's growth was groceries. Groceries. It wasn't clothing. It wasn't household goods. It was groceries. Second, in the note about the quarter, they talked about households making 6 figures, $100,000 a year or more, increasingly trading down or shopping at Walmart. That is a sign, in my opinion, that Target was going to be weak. First and foremost, Target doesn't have groceries. Where was Walmart's strength? Groceries. Target doesn't have groceries. Second, what you are seeing now is people looking to conserve and save their discretionary income, their spending. So they are increasingly going to Walmart for the deal, the low-cost provider. So Target came out today with pretty atrocious numbers. Target missed on revenue. They missed on the bottom line. They cut their forecast for the next quarter by 50%. 50. Worst of all, this is something you and I should file away. Target warned about the holiday season. Kind of feels like we're heading into a rough patch. So again, I believe Target is telling us what's coming. Walmart, again, you got to buy food, and people are going there. So Walmart's numbers appear at the surface level strong. I don't think they were as strong as they looked. And then lastly, on Target, they announced a target of a $3 billion cost cutting. Cost cutting. Layoffs. This, that, the other. We're now likely even going to see layoffs in retail, probably in Q1. I couldn't imagine they'd want to do that in Q4. But that is just kind of where we are together. Now let's talk about Home Depot and Lowe's. Home Depot exceeded top and bottom line yesterday, I believe, and maintained their forecast. Lowe's this morning beat top, beat bottom, and talked about better than expected same-store sales. So again, on the surface, I would say Lowe's, splitting hairs, was probably slightly better. But you and I talk about real estate a lot. And it appears that people are still investing in their homes. Now, what is really going on? Are people just finishing projects? Maybe. Are home builders finishing divisions? Maybe. Are people getting ready to sell? Maybe. Are people just keep investing in their home because they know they're not moving? I have no idea what the ratio of all that is. They're probably all true at some level. I suspect what we are seeing is natural human behavior. You are at home with your husband, wife, and family. You have a mortgage sub 4, maybe even sub 3. You know you're not going anywhere. So, you're just going to doll up your place or your nest. You're going to update the front yard, the backyard. You're going to add the swing sets. I don't know. It just feels like people are saying, I'm not moving. I'm going to invest in my home. But again, that's an opinion, wild ass guess. Love to hear from you if you have thoughts. Why are people still spending at Lowe's and Home Depot when Target is crashing and not doing well? I'd love to hear from you. Leave comments below. I read all my comments. Thank you so much for that. Real estate agents. Folks, remember something I've been talking about for a while, the housing crash and transactions? That is going to ripple through and hurt a lot of people. We have already heard about real estate agents, mortgage brokers getting new positions. Now we have real estate offices. Real estate offices increasingly not paying their rent. I have it down here. Where is it? Oh, I'm sorry. 37%. 37% of real estate offices did not pay their October rent. Think about that. 1/3, actually more than 1/3. More than 1/3 of real estate agents did not pay their October office rent. Wow. Wow. That is up 12% in a month. Folks, this is happening. This is happening. A crash in 50% in transactions. It hurts millions of people across the real estate space. Real estate, in my opinion, it is in a depression. It will pull the economy into a recession. That is where I believe we are going. We saw this morning also builder sentiment at a record low since 2012. Housing is in a depression, and the Fed won. The Fed told us this was coming. The Fed said, I am going to create pain. And housing is the most levered industry, and the pain is quick and sudden. Sorry. Earnings. I got some more earnings for you today. What do I got? Winnebago RVs. I think both you and I knew this was coming. You and I have talked about Winnebago probably for the last year or so, saying, when is this going to give up? Well, it just gave up. Now, Winnebago is trying to say, hey, we are just normalizing RV sales. I have news for you. You are not normalizing squat. You pulled forward so much demand. You should actually, Winnebago, go out and try to buy some used Winnebagos, because there are going to be some people selling those things that have very little mileage on them. Seriously, Winnebago, you should create a little group and try to go buy some of your RVs back for pennies on the dollar, clean them up, and sell them as used RVs. Make margin, because the demand for RVs is going to be down for 3 to 5 years, in my opinion. Next, advanced auto parts. Advanced auto parts, another darling of the pandemic. We have talked about this many, many times. I said, when is it finally going to break? Bam, broke. Winnebago missed on earnings and lowered expectations for future quarters. The used car market, the fixing up your cars, done. Advanced auto markets finally cracked. So we talked about Lowe's, we talked about Target. Let's talk about BlockFi just because I have it here. BlockFi looks like it is another crypto exchange, I believe, or lender. I guess it's a lender preparing bankruptcy according to CNBC and Bloomberg. This crypto contagion, it is going to ripple through the industry for weeks to come. It is not going to be pretty. There are millions and millions of moms and dads and small investors that are getting really wrecked, and that is very unfortunate. I don't like to see that. Household debt. Household debt. Household debt is now at a record. Household debt is up as a 15-year high, and credit card debt has expanded at the fastest rate ever at 15%. So this is an article I read yesterday, knowing that we were getting retail sales today. I think this is what's going on. The average American is conserving, saving cash. So they're increasingly pulling out their credit cards. I don't know how else to explain it. Why was retail sales surprised to the upside? People are charging more and more. Yes, we keep hearing about the balance sheet of the average American being strong. I believe if you take that talk track of a strong balance sheet and record credit card purchases, you actually have conscious decisions. I am nervous. I am going to save my cash and I am going to charge groceries. I think that's what's going on. I'm not sure how else to tie this big picture together. So finally, I can't believe that Millennial Mike has done it already. Folks, if you don't recall, we had our first live One Rental at a Time mastermind event last Saturday, the 12th of November. We recorded the entire session. Millennial Mike is going through and cutting up different components. If you are in my course, How to Get Started One Rental at a Time, we loaded the opening remarks and the giveaway this morning. It is already live. You can go to the course, scroll all the way to the bottom, and you can get the first 8 to 10 minute opening. If you want to get the entire One Rental at a Time mastermind event, you have to buy the course. I will load them as they are created. My intention and Mike's goal is to have it all done by January 1st. That is our goal. The first one went live today. As I have said before, once it is all loaded, the cost of the course is going up. The cost of the course will go to $399. It is currently $329. If you like to save money, buy the course today. And then as we load episodes, you will get them for free. Hopefully that makes sense to you. And there's a lot of value there. You also get the private Facebook group. Folks, we've had dozens and dozens of people sign up in the last 3 days. Please, if you are one of those, first, thank you. But join the Facebook group. Introduce yourself. It is an amazing group. Lastly, I want to give a shout out to a One Rental at a Time member, Mark. Mark is also a member of Sub 2. And one of the things the Sub 2 community does really well is they network in smaller groups. I believe One Rental at a Time now, and almost 2,000 members in the Facebook group, is big enough now where maybe we could start networking in our little areas. So Mark loaded it yesterday. Go ahead and take a look at that. It is in the Facebook group. Let's start filling that out so maybe we can create little pods of One Rental at a Time students that are sharing, networking, getting better together. And then finally, let's congratulate somebody for getting a deal. John and Laura, congratulations for getting your deal. Your card will be in the mail today. If you don't know what this is a little giveaway that I do to congratulate anybody who got a deal. this is your next deal. Let me just grab this. Sorry about it. If you get your first deal, I send you a gold card. So again, your next deal, your first deal. So if you get a deal done and one rental at a time helps, send me a direct message on Instagram or in Facebook, and I too will give you a shout out at the end of the daily financial news, and I will mail your card. So congratulations, John and Laura. And don't forget, if you couldn't make the mastermind, you want to be a part of the community, you like to save money, buy the course, join the community. Mike, if you're watching, thank you. I can't believe you've already done the first video, merge the audio and video files together. So thanks, Mike. We all owe you for taking on that hard challenge. Take care. Bye-bye.